Welcome, everybody. Thanks for being with us today. Uh, we're broadcasting live from Park City, Utah, where I am, and Dave is in Virginia. And if one of these Daves turns into Ben, I think he's also somewhere around there. So thanks for the Family Office Insights community for joining us. Super happy to have you. I'm glad to host Outpost Ventures today, and we have a discussion around the opportunity to invest in the fund, and we'll tell you more about that shortly. Please feel free to post your questions as they come to mind to the chat box or the Q&A. We'll get to as many as possible. We have a bunch of folks coming on today, so please post them as you think of them. We're going to make sure that everybody gets in touch with Outpost post a webinar and make it really easy for you to connect with them. Just to be super clear, the objective of today's chat is to talk about the raise, which is quite mature, and you'll learn more about that. So if you're an interested investor, please feel free to connect with them directly. Also, as you listen to the program today, if there's anybody that comes to mind that might benefit from hearing what you heard today, you're certainly welcome to make sure. You're certainly welcome to put them in touch and make sure you do so directly, and feel free to do that. As you know, we don't stand in the way of any of that, so you don't need to call us and then get in touch with Dave and Outpost. You're welcome to do so directly. We're going to be posting this to the Family Office Insights YouTube channel as a recording. So again, if you want to revisit it or share it with others, that'll be there for you. So with that, welcome. Thank you again for being with us this afternoon. Dave, is it Dave? Dave, welcome.
David. My dad had a saying. He said, "Just don't call me late for dinner." So I guess
Right,
that's
exactly. Yeah.
that's the saying.
Great.
So
Hey, thanks for being with us. Take it away.
great. Art, thanks for the invite today, and appreciate it. We had a great chat, and we were just talking about hey, how can we investors capture kind of this massive value of this government funds matching program that I had helped set up, and so you were like, yeah, let's take a look at it and see if this is something for the community. And so, glad that you were excited about it. Glad that we could get on here today and kind of share, and happy to, follow up. So,
Yeah, super happy to have you.
yeah, no, thank you. So yeah, happy to share, make it interactive, probably go, try to go 15, 20 minutes and then leave some time for, Q&A, as much as possible. So, I think people will get it fairly quickly. So real quick, I think maybe we'll just start, a little background on myself. Ben Strub is a CFO on here. We're headquartered in Alexandria, Virginia, but, he's in Oakland on the West Coast. So we got both coasts covered. I was a C-17 pilot turned business guy, investor. So about 5,000 hours, 500 combat hours. As you get to say, see the world with the Air Force, so to speak. So here we are, and just kind of I would say kind of a really varied background. I've wound up writing books, speaking, consulting, Fortune 100 consulting for the oil industry, Shell, Halliburton, BP, Saudi Aramco, running tech companies, building innovation ecosystems in Charleston, South Carolina, closing bonds for Guggenheim, running $100 million nonprofit. So just really a varied history of, I think, skill sets, which really led to a culmination that I would say is kind of famously or infamously built the Air Force's innovation arm known as AFWERX. So you can do a quick search of, Dave Harden, Harden, and AFWERX, AFWERX. And you'll find a bunch of articles, MIT and stuff like that. And you'll kind of see, what I've done and kind of what my background is. But primarily closed 50 million inside the Air Force as a reservist. I got sucked back into the DoD thesis for about 3 years after I was facilitating all the 4-star generals in the Air Force. They told me it was going to be 30 days, turned into 3.5 years of my life, as these things sometimes do. So
back in.
Yeah, they'll suck you back in. So, but super rewarding. And while I was doing that, I said, hey, we have to get technology out quicker, for the nation and for the warfighters, and with the new competitive landscape as everyone's aware of Russia and China and the situation of growing competition. We got to do the right thing. So we have a simple vision statement, which is do good, make money. Actually got that trademarked.
Oh, nice.
So yeah, it's something that we're just passionate about. So we're mission oriented, but want to make money for our investors. So that path led to essentially building a innovation hub, fencing off $200 million to reinvent the small business process, doing a bunch of other stuff. But one of the things we did is created an apparatus of bringing in private capital and government capital. And so nearly $5 billion has gone through that apparatus over the last 5 years in what's called the matching funds program within the U.S. Air Force. So I left in June 2019 and started a company to help companies get that matching funds program. So we have a proprietary accelerator or incubator that feeds our venture fund deal flow, i.e., we're able to bring in our investors before government money is valued in the company. So there might, we've talked a lot to some real estate investors. You might have some real estate investors on the line today. The way I equate it is there's an old adage, right? You don't make money when you sell the house, you make money when you
Yeah.
buy the house, right? Okay, so
And
same thing,
and
right?
that accelerator is active, up and running, ongoing business, continues to.
Correct. So there's 30 people. I don't run the day-to-day operations because I've moved my fiduciary responsibilities to the fund side. But yes, that's up and going. And companies are getting contracts every day. Over the last 4 years, about $500 million of contracts has been closed by the Outpost.
Nice.
Outpost Ventures, our fund, basically has a first right of refusal to invest. So we get to cherry pick the good deals of technologies that are coming through that. And unlike maybe a traditional VC, we get a lot more time on the due diligence because we see companies for a longer period of time.
Yeah, you
Do they
help
have a
them
good
tell their
team?
story too, right?
Yeah, can they pivot the product?
Yeah.
Is there actually an opportunity? Are they getting traction on where they're thinking about the product going? So we get to learn a lot more stuff. And so we're just going to talk about that a little bit today and
Yeah.
give a little bit more detail. It's the concept's super simple. Like I said, you're buying a discounted house, and we're able to kind of bring in our investors before that valuation. And I'll give some case studies and examples of some of our first investments and what that looks like so people can really grasp what that looks like in practice. Super simple. We started our fundraise last May with a first closing with a few $1,000,000. Our first year here, we're deploying and raising. So because we have this pipeline of deal flow, we're actively kind of investing in the decisions coming out of this matching funds program. And then we'll be closing the fund here, fund one, at the end of May. So we essentially have 3 months, March, April, May, for anybody that wants to get in as an LP investor. Typically, the minimum check size is $1 million. We have waived it in certain instances. Arthur, you and I were having a conversation before on some of our limitations, 99 investors. And it looks like we're going to be oversubscribed, in this fund. So we after next week, we'll have 106 million of subscriptions. So we're going to be on the back end of our fundraise. Our target was $120 million fund. Without hitting kind of the next SEC threshold, we can oversubscribe up to 149 million. So, we basically can take on another 43 million over the next 3 months as we close out basically fund one. So
Is the construct a typical 2 and 20 with a sort of catch up type thing, private equity type structure?
yeah, straight VC 2 and 20.
Yeah.
Nothing,
Yeah.
yeah, nothing crazy about it. So,
Yeah. Nice.
and so that's a little bit about myself and just kind of teeing up our next kind of few minutes together. But I'd like to take this opportunity and have, Ben introduce himself, our CFO, give a little bit of background, and then, I'll kind of dive into a few examples of what we have cooking.
Sure.
Ben?
Yeah.
Thank you, Arthur. Yeah, can you hear me okay?
Yeah, we
Can.
got you.
Yeah.
It's a pleasure to be here. I've been a finance executive for the last 20 years, spanning several different industries, most recently in banking. I helped a de novo bank raise $250 million deposits and bring their total to about $1 billion. Prior to that, I'd spent 7 years with an IRA custodian for self-directed IRAs. I built a deal structure that helped them buy their largest competitor and emerge as one of the largest players in the industry with over 10 billion in assets under custody. I'm a CFA and very much am enjoying this process of building up this venture product.
Yeah, it seems like it's super exciting. Thanks, Ben.
Great. I see we already have a chat in here. So before I continue, I'll just kind of answer Robert's question.
Sure.
Online says, how many startups go through your accelerator each year, and do you only invest in your accelerator companies? So the answer is the Outpost has about 30 active clients at any time, and has basically touched hundreds of companies over the last few years, probably nearing 1,000. So large pool to choose from. Arthur and I were having this conversation a little bit beforehand. Just think of it of us having the ability to cherry pick, the first right of refusal, and longer due diligence. So it's really good to have this proprietary deal flow that comes to us. I would say probably, in the 15 to 20 investments we'll make out of this fund, you can assume that about 60 to 70% will come basically out of the Outpost. So about 30% of our deals will probably be outside of the Outpost, but on thesis, so to speak. So hopefully that
Yeah,
that
I
answers
think
your
that answers it. What
Yeah.
do all the companies look like? What we the pedestrians of us, the non-military sort of folks, think that there's like super cool tech that the government has because they've got endless amounts of money and they need it to protect us. I mean, if I could just editorialize that, is most of what you're doing that sort of thing? Companies are like that.
Yeah, I think it's a mix, right? And I say that because I think I find both extremes. There is some really cool stuff that you'd be blown away with. There's also some stuff that just needs to get done that you'd be less blown away with,
Yeah.
right? And so we talk about deep tech, but we look at this as we're getting, we try to bound our investment for this fund. And so, there is some really cool stuff, but we're not going to look at stuff that's like 10 or 15 years to totally get commercialized, right? So typically, we're not taking some of the front end risk. And what I mean by that is all of our companies typically have some investment, a product, some revenue already, and some government contracts before our fund invests in them. So we don't invest in pre-revenue companies. So that's one. Two, on the exit, we're looking to shorten the IRR time, if you will. So we have a very conservative 31% IRR on the fund. And, for folks that take the next step, we have a great data room. All of it's data driven based on companies that have come through this AFWorks program. And, we're able to show how there's very little risk once they go through the program of kind of the company going to zero. And the other piece of it is we look really to the M&A or to exiting in a future round. So our fund kind of doesn't take a lot of front end risk, and we don't take a lot of the back end risk, like waiting around for the commercial markets or the IPO, so to speak. So I just mentioned that because, we might not be investing in the latest like moon laser technology because that's, 10 or 15 years
30
away
years out. Yeah.
as you kind of think about what are the types of things we're investing in. But I think that leads to a great example. So let's talk about the first investment we did make out of the fund. And I think that'll highlight the
Yeah.
thesis hopefully really, really well for everybody on here. So our first investment was a company called Electra.aero, which is basically a hybrid electric, call it short vertical takeoff kind of technology. So what they're going to be able to do is essentially feed the current hub and spoke system you see in commercial travel. but be 70% more efficient on the edges. So think about helicopter markets and stuff like that haul people to basically hubs. On the commercial side, that's what that does. We invest in something called dual use technology. So we'll never invest in a military only technology. They have to have a commercial market and a public market. That's what that means. So they have to get revenue from both for us to invest. So on the dual use market, this is where they got involved with the Air Force, and the Air Force was looking to, hey, can we help with logistics, moving troops around, stuff like that, in a cost efficient way. So Lockheed Ventures was actually priced the round with Electra, and that was at a 65 million pre-money A round. We, Outpost Ventures, came in on the tail end of that round. And the reason why we came in the tail end is that matching funds piece that I talked to you about. So all of a sudden, there was this $30 million 4-year contract that was awarded. That's all non-dilutive capital, essentially top-line revenue for the company. Meanwhile, we're coming in the tail end of this 65 million pre-money round. So literally, Outpost Ventures, we put our money into escrow. And when the government signs that 4-year contract, our investment gets released into the company.
At $65 million valuation.
Right. Pre-money valuation. So that further protects our investors, because we know now they have revenue, additional revenue that's not going to just eat into our equity check, right? And this is all in real time. So this is like, let's call this, June, July-ish. A couple months later, they do their 2C demonstrator. Now they have this additional 30 million in revenue. So now they're back out to market for their B series with UBS Credit Suisse at somewhere around 180 million pre-money. So, we get kind of a 2x, 3x bumps because we're able to arbitrage the timing and the value of these deals. And so that gives you a sense of like a typical deal and what we come into and how we structure.
And so do you define non-dilutive capital as grants and revenue?
Yes, the matching funds program in particular is actually a contract that generates revenue. We just say non-dilutive because since there's a private equity piece and a government piece, the government piece takes no equity. So it just helped clarify that it's not like the government's taking a piece of it. So it's truly more revenue with no more equity. So if you come in as an investor at the same time, right? And Ben walks people through it really well, which is, we're doing an LOI at the beginning of that process.
Yeah.
So we set the valuation when we start the process.
And they agree to it.
They actually win the award.
Yeah.
But we've already negotiated the valuation that we're coming in at.
Yeah. No, that totally straightforward, makes sense.
Yeah.
Are there also non-dilutive grants? That's kind of what I was getting at. It may not be part of your thesis, but that happens from time to time, right?
Oh yeah, 100%, right? So there's many different ways to think about helping the company or bringing it in, but just from a pure investment standpoint in our thesis, they have to either be on track or be in this particular program. We can invest 20% outside the thesis. That's essentially what our PPM and LPA say, but 80% will be related to this thesis I just described.
And so far, is it a fair question to ask if you put the money in escrow, they're about to get the contract, do the wheels fall off? Does that happen? Does it happen often? Do they not get the contract? How does that work?
In this matching funds program, it rarely happens, but it can be about timing and get stretched out. So maybe they announce it and hopefully the contract signed, let's say 60 days later. But what happens if that starts to be 90 days, 120 days?
Yeah,
that can happen in terms of longevity. Typically, it still gets done. It can just get stretched out because it's government, right?
Yeah, bureaucracy, right? Totally.
Yeah. So it just protects, it protects us and our investors a little bit more. Yeah. And having talked about Electra, I see, Nick had made a comment about just talking about some of the other investments or maybe some investments that are lined up in the pipeline. We have LOIs in that we're going to be deploying further capital into. Our next investment was in a company called Sapphire. So Sapphire was technology that came out of Oak Ridge National Labs. And In that case, their technology goes into like lithium ion batteries. So if you think about kind of a liquid state, it's pretty cool tech. So if there's an impact with the battery, it turns from a liquid state to a solid state. So imagine Tesla never having a battery fire crash.
Right. Yeah. It keeps it from
Right?
blowing up.
That's
Yeah.
billions of dollars in brand damage when that happens, right?
Yeah.
It's not good for business.
Yeah.
Separately, there's a lot of structure that goes into the batteries. So there's actually a real cost savings for their technology in that they save hundreds of pounds of steel in the battery support that wouldn't be necessary basically with their technology.
Because of weight.
So weight, yeah. So
Yeah.
there's a real ROI thing in addition to kind of just a brand thing.
Yeah.
Now, what was interesting is they also discovered that when it goes in that solid state, it has anti-ballistic properties. Hence the dual use tech application.
So the
So
batteries will be impenetrable, but
yeah,
only through an accident.
well, only through an impact, right?
Right.
Impact can be an external piercing or an impact.
Got it.
So
Yeah.
so they got two contracts. One was for several $1 million to prototype an e-bike for special operators. So think about this. I have an electric bike that drops off with guys parachuting out of a plane. It and they've now added to their patents to self-actualize the solid state. In other words, I can put it to a solid state on the plane, drop out. When I hit the ground, it doesn't blow up. There's no impact. I can turn it back to a liquid state, right? Now,
Transformer.
yeah, now I have a silent battery and I've reduced weight because the parts where the battery are in, I don't have to add very heavy Kevlar, right, to add additional protection.
Yeah.
So there's a weight advantage as well, in addition to the electric bike being quieter on the ground, right? So super interesting kind of use case
Yeah, super cool.
that
Yeah.
evolved, but we have potential for 100x. It'll take a while, and the home run is, can they scale, prove it out, and get into OEMs?
Yeah.
That's a 3 to 5 year process.
Yeah.
But if we hit that, we believe that's going to be a big winner for us. So that's a pretty exciting technology that we're invested in now, and we have an LOI for further on investment with them as some of these decisions come out of the government. So that kind of gives you a
Yeah.
a sense of some of this. There's an anonymous attendee. I'm not sure what the question is about compensate consultants submitting projects. We're just talking about investing in the fund here. In
No
this
matter what we
conversation,
do,
but
hold on
yeah.
a second. My computer just blew up. Hold on.
Yeah.
Can you hear me? Okay. Okay. Yeah. So this
Yeah, I
is
can
about raising money, not bringing deals to the. So we can't tell who you are, so we can't address you by name. But post raising, if you want to bring a deal to the table, you could probably do that. But let's focus on raising money for the moment. So
I mean,
yeah,
we have a ton of deal flow, and like I said, a ton of investors. We're really looking for patriotic LPs
yeah.
that want to come in and get a good return, and get into this dual use tech space, which is really kind of exploding here.
What is the
Years of momentum.
what do you, if you haven't done it yet, but you say we don't want to prefer not to be on the back end. Is your exit just to a private equity company selling the company, like, so you don't carry on the tail?
Yeah, we just try to keep our investment window to kind of like 4 to 5 years. And I think that what we're looking at is typically an M&A. So as soon as that matching funds come out, a lot of these companies do become good targets for maybe Koch brothers or Caterpillar on the commercial side, or Boeing or Lockheed, right, on the
Lockheed,
Fed
right?
side, right? And so they're going to be a good target. So that's one way we liquidate our investment for our investors. The other way is we put several clauses in. So let's say in the electric case, we come in at a 65 million pre-money on an A. They're going to raise their B, right? Let's say that's 6 months, a year later. They'll execute that cash for 2 years. And let's say it takes them 6 months to a year to raise their C. We have several clauses that allow us to roll out either primarily get taken out by, let's say that'll be primarily institutional money in the C round, first right of refusal to the current investors, or secondary offering. So to the max extent possible, we try to have multiple ways for us to go out in a further round where it makes sense for us
Yeah,
to
you can
keep
just
in
roll
our.
into the round and go to the next investor
Yep.
yeah, that's super cool.
Yeah.
That's like um secondary market type stuff, right?
Yep.
Yeah.
So a bunch of questions here. I got Nick, are you seeing any action in hydrogen fuel cells? I mean, there's a lot of stuff cooking. I would say that right now, hydrogen fuel cells falls a little bit outside our investment time window in terms of where we think there's money there to really kind of scale. So we're definitely monitoring the industry. But I think we're monitoring, but we're not making, I would say, heavy investments in that area right now.
Yeah.
I guess our anonymous attendee maybe is back again.
It could be another one, yeah.
Or maybe another one. Does the U.S. government get any rights to use the company's technology without further compensation? Typically not. We work a lot within what's called the SBIR, or Small Business Innovation Research pipeline. That's what qualifies you to participate in this matching funds program. And there's something called limited rights, which means typically the company retains rights for up to 20 years. Unless there's something specifically developed that the company didn't develop, but they developed as a result of the money. So there are some instances where some stuff becomes a little bit more governmental rights, but the space we play in is probably the most protective of small business IP rights within the government setting.
Is that SB, et cetera, thing become more effective, streamlined, easier to get? If they actually, because I remember them threatening to make it easier. Is it humming along pretty nicely now?
I think so. I mean, I spent I mentioned those 3.5
Yeah.
years. So a big chunk of my time was basically trying to improve that process and reinvent how small businesses could access the government. So I would like to say that that's made a lot of advancements, and we take advantage of those advancements through this investment and this program. It's always kind of 2 steps forward and 1 step back. So definitely bureaucracy creep back in, and a bunch of other things creep back in. But
Or an election's coming up and nobody knows whether they're going to still be there or not, right? Yeah.
right, I mean, the good thing for us is we're politically agnostic. So whether you're for Biden or whether you're for Trump,
Yeah.
or something in between, we're going to be in good shape. This comes from an authorization from Congress. That's a multi-billion-dollar authorization for small business. And I think last year they had a little bit of arm wrestling, but it was approved for the next 3 years.
Well, that's good
And
news. So
so,
it traversed an election cycle. So that's super cool, right?
yeah, so we're in great shape. I mean, the decisions are coming out already from the previous round. That's what we're going to be investing in. And the rest of a fund will invest in the next decision round, which will be this time next year. And so basically most of our capital will be deployed in 12 to 18 months. And that money is already set aside for this program. So I never say you have zero risk, but we have very little risk being impacted by politics or year-to-year cycles.
So is that how it works? There's this time of year every year where they actually are going to deploy the capital into these companies or decide to.
Yeah, so I mean, typically it'll be like kind of the fall is when the packages go in for those that can qualify for the program,
Yeah.
and then the decisions kind of are coming out now.
Yeah.
It was supposed to be earlier, but slid like a month or two.
Yeah.
But those decisions are actually coming out now. Some of the companies we have LOIs in to invest in.
Yeah.
And I think Larry has a good question: is how long till distributions? Like I said, our window is typically 4 to 5 for investment. So in Electra, we'll try to be out of that investment in 4 to 5 years. That's when you'll start seeing returns. The money goes back on a pro rata basis to the investors first, and then it's an 80-20 split with the investors. 80% going of the upside going back to the LP base. So if you invest today, you'd start probably seeing returns in year 4. Most of the money coming in year 4 through 7, And then, in the couple of out years, some residual stuff, right? But you'll see most of your returns between year 4 and 7.
So if you fill the uh, fund, will you likely go on to fund 2 right away?
Yeah, we will. Like you said, we'll have probably 12 of 18 months of kind of deployment.
Yeah.
And then we'll begin fundraising fund 2. So
Super cool. So how much time, we're going to run out of time here, but
yeah.
thanks everybody for your questions, but I think we got to most of them. How much time do people need? How much time do people have to get the docs, make a commitment, send the money, that sort of thing?
Yeah, great question. So if any of this was interesting to you and you have some, capital deploy, somebody has some capital deploy, either Ben at outpostventures.com, or myself, Dave at outpostventures.com. Shoot us an email. I can even, here, I'll put my cell phone in the chat window there.
Nice.
So 202-815-5029. So reach out to us. The next steps is basically Ben would, get you an NDA and the deck that kind of just explains kind of what I went through. And then if you're still interested, or assuming you're interested, we have a data room. You can walk through the data room, see all of the, docs, see the data that comes out of AFWorks, the thesis, any of that stuff. And then we have a streamlined process for the PPM subscription agreement. So we use a system called Flow. So it's all digitalized. You get on there, basically do your disclosure, kind of your KYC stuff, your accreditation stuff, but it's all streamlined. I don't know, Ben, what do you think? Someone sits down, takes 15 minutes tops. Maybe you got to
Tops.
research a little
It's
bit.
a very straightforward
Yeah.
process. It's just filling out a
So
form, basically.
Yeah.
yeah, and so all that can be pretty quick. So I mean, typically what we would see is someone would follow up after this call. We'd send them the information. They'd sign the NDA. Ben can do a quick data room walkthrough or answer further questions, maybe a half-hour call. Typically, people are then making a decision, and then whatever their timing is within the next few weeks, we get them a Flow link. They sign up, and then they, subscribe and commit. If it's less than $1 million, typically we'll do the capital call kind of right away.
Yeah.
If it's more than $1 million, then they'll be just part of the capital call schedule over the next year.
Yeah.
In terms of when we draw capital for the investments as they come. So that's typically what it looks like. And like I said, today's March.
12th.
So
Yeah.
we'd want to probably, get people subscribed by the end of April.
Yeah.
And for this group. And it could trickle into May a little bit, but that would be pretty much the closeout of this fund. And like I said, we have room for oversubscription. So we can go up to around 43 million. We're in due diligence with some other institutionals for 10 million kind of checks. So that's kind of the room we have left in this fund.
Yeah, great. One last question. Well, I don't need to know what I ask you to disclose, but what's the investor profile look like now? Mostly high net worth family offices, people you know. What's it look like right now?
Yeah. So mostly it's, high net worths and family offices. Typically, so we have, some folks that, either had an exit from the business, maybe they were even a dual use company, so they really understand the model. We have family offices that were just, expanding into alternative assets, and the timing worked out, fairly well. So I'd say that's we had a couple patriotic, LPs that were doing dual use tech stuff in different states, like New Mexico or Nevada. So I think it's a wide range of folks. I think we're in talks right now for, family owns a bunch of dental offices. Came across what we're doing. They have some capital to deploy, and they like, hey, we want to branch out. This is pretty cool from what we kind of normally do. So we
Nice.
really had a range of, investors come in.
Yeah, congratulations. Super cool stuff.
Yeah.
Thank you, Ben. Dave, thank you for doing this. Really appreciate it. We have to wrap it up, but we'll make sure everybody gets in touch directly with Ben and Dave and post webinar. And so super cool stuff. Thanks, guys.
Yeah,
And
thanks for having us, and
yeah, you bet.
we'll be happy to follow up with anybody as they email or call. And wish you luck. Thanks again for having us as a guest and having the conversation.
You bet. Our pleasure. And as I always say, folks, thank you for being with us and sharing with us the only thing you can't make more of, and that's your time. Till next time, guys. Thanks very much.
Cheers. Bye-bye.
Thanks, Arthur.
Welcome.